Right, hello and welcome to another Expert Inside interview. My name is John Golden from SalesPOP, online sales magazine and Pipeliner CRM, joining you as usual from a sunny San Diego. And today I'm delighted to be joined from what they like to say here as across the pond in the UK in London by Lisa Conway-Hughes. How are you doing, Lisa?
Very good, thank you. Thanks for having me on.
Of course, of course. And Lisa is a chartered financial advisor and fellow of the Personal Finance Society, a qualification that's held by fewer than 2% of PFS members, founder of LCH Wealth in the City of London, and runs misslolly.com, where she shares practical, jargon-free financial guidance. You're also the author of Money Lessons, How to Manage Your Finances to Get the Life You Want. And you're passionate about making financial education and literacy accessible through your writing, speaking, and blogging. What we're going to talk about today is smart money moves for self-employed and business owners. So, Lisa, just to start off, what's the biggest financial mistake that you see self-employed individuals make when they're starting, or entrepreneurs when they're starting a business?
I think not separating their personal
Yeah.
money and their personal financial plan to their business. Sometimes it's all or nothing. If the business fails, they're going to do really well. If the business doesn't do well, they haven't set anything aside.
Right.
Yeah, I'd say that. And I've seen many clients go through many cycles. Um,
Yeah, so it's always a good best practice from the get-go is not to commingle, right? Is to keep personal finances absolutely firewalled from business finances, even if it seems like a kind of even if it seems like overkill at the beginning.
Yeah, I would say, I mean, if your business fails, they could come after your personal finances just as much. But I think it's really about the organization.
Hmm.
So trying to get your business as quickly as possible into a position where you can pay you as the employee of the business the salary that you deserve for the role that you do.
Yeah. And one of the things, I mean, this happens, and it happens a lot when people go out on their own or they start businesses, right? Is the runway of liquidity that they have, or the runway of capital that they have, and most things in life, unfortunately, and business take longer than you would like, or even than you originally projected. So, talk to me about the concept of an emergency fund, and what should you be looking at in order to mitigate against running out of capital.
Yes, so I think the first thing is to really know your numbers. And I know that sounds obvious, but lots
Mhm.
of people round things down, round things up, and they're not that accurate. So, really doing a proper acid test of your money would be to look back over the last 12 months and see what you really, really did spend. And use that number in your figures. So, let's say you're spending £50,000 a year, and you know you'd need to cut back by half. That might not be achievable. It depends at the stage of life that you're at, I
Mhm.
suppose. But I think firstly is really knowing your numbers, understanding what you're going to try to pay yourself and when, and then really getting a grip of the cash flow of your business as well, so that you can build up to paying yourself something that's quite predictable.
Yeah, because one of the issues that often entrepreneurs and small business or solopreneurs have is, especially if they're in especially if they're in service businesses, right? It's like they got to go and find the business, and then they got to go deliver the business, and when they're delivering the business, they're
Yeah.
generally not finding new business, so you get into this whole uh feast or famine cycle. So how do you advise people when they're in a cycle like that? How's best way to manage it?
Well, I think it's thinking about the business model, because that can be a very stressful way
Hmm.
to run a business. And I've been in that exact position myself. So I know how it feels. Um, for me, what we put in place well, 15 years ago to solve that problem was a retainer basis, so that created this
Right.
regular steady stream, and that created some sanity within my business. But maybe it's about hiring the right people so that you're not doing everything, to help with that sort of sanity of regularity.
Yeah. And then obviously, we all love tax season, right? It's our favorite time of year, not. But how do you advise people to get ready, the small businesses or their solo businesses? How can they make it as easy as possible? What are things that they can do throughout the year, or even coming up to tax season, to make sure that this will be as smooth as possible?
Well, the way that I do it is I treat it as a Monday morning job. It's only sort of a 15-minute job, and I over egg my taxes. So I work out what's come in the previous week, and I overestimate the amount of corporation tax that I'm going to have to set aside. So for me, I set aside 25% of everything that comes in for tax.
Hmm.
And I know that that's far too much, and the accountant will do a calculation at the end of the year to sort of say how much I owe myself back out of the tax account. But I think just doing that on a weekly basis really helps me, because A, I know I'm over saving, but B, the money's there when it comes to having to pay it. And again, I've been there before when I'm struggling to pay the tax bill because I've overspent on trying to grow the business. Um, I think the other thing is really having proactive conversations with your accountant. So a lot of
Hmm.
people um, worry about their tax after the
Sure.
tax year has ended. And so maybe it's a check in quarterly with your accountant, especially if you're new and things are changing quickly. I would say would be a very good thing. And then the way that I also set myself up, maybe you can tell that I'm a worrier, but I also try to do my absolute heaven for running a business would be then to set another 25% away for profit.
Sure.
And that profit, because it's segmented in a separate account, every time, and I'm doing that weekly, sorry, as
Mhm.
well. Every time that I'm drawing out of that profit account, I'm making a decision. Um, am I funding the future of the business? In which case, maybe that's a legitimate reason to take money out of the profit account, or am I willy nilly spending it? In which case, I rather should pay it back to me as personally as the director.
Yeah, and I think the thing is, as you said, I mean, you're being proactive about this so that you're not having that stressful. And the problem is, a lot of people don't worry about it after time. When they get their bill, and then they're like, "Oh, I wasn't expecting this," or they're having. And I think the other thing that you mentioned there, the really important thing, is having a very good relationship with your accountant.
Yes, and it's a two-way street. So don't just rely on your accountant to always be getting in touch with you. I think
Mhm.
you need to be informing them of when things change, and having that open dialogue with them constantly.
Yeah, but I think that's a great. I mean, that's a great piece of advice for people. Putting aside your taxes, like proactively managing it, maybe overpaying if you're not good at managing money, or you want to save a little. It's always a good thing. You mentioned earlier as well about when we were commingling funds and stuff, and how they, if your business collapsed, how they could probably come after you personally, maybe. What about incorporating? If you're a solo, premier, small business, would you recommend incorporating as a limited company, limited liability
I
company?
mean, there's lots of advantages to it, but I think really an accountant would be best placed. I chose to incorporate my business
Hmm.
really for simplicity and to separate it from my own personal money,
Yeah.
and for the security that it can offer as well.
Yeah, and I think it's good. I mean, yeah, I think you should get advice, but I think it's always a good thing to look at, what are the advantages of it. As you say, it does put a firewall between you and the business, your personal life and your business, which I think is always a good way to go. And there are other benefits too. Um, uh, so what about all these other hidden costs that owners have, uh, that they don't, when you're a solopreneur, right? You don't have sick days, you don't have, everything you do impacts the business, right, in one way or another, right? So how do you help people manage their way through that?
Well, they do say the biggest cure for sickness is self-employedom, don't they? So I think
Yeah.
I think you need to have your sanity in place so that you're
Mhm.
making good financial decisions, and that comes by having a really robust safety net. So we talked about the cash, so having 2, 3, 4, maybe a year's worth of income set aside, or that you're working towards building up gradually if you're very new. I always recommend to clients, if they're running their own thing, that they have some income protection in place. The business could pay for that in some cases. If you're a sole trader, then you're going to want to pay for that yourself. And then it's things like critical illness cover. So I think having the insurances in place are really going to help. And I think another tip to keep you sane is really, really forward planning where your business is going to be or needs to be in order to remortgage. So if your mortgage is coming up in 3 years' time, I would start speaking to a mortgage broker maybe 2, 3 years in advance, so that they can tell you what the numbers need to look like for you to be able to remortgage easier in the future as well.
No, absolutely. And what do you think are some of the basic kind of key performance indicators that any small business should be tracking, especially from a
Um,
financial point of view?
So, well, they always say sanity versus vanity. So,
Mhm.
vanity is your turnover, sanity is your profit. I think those are the key ones. For me, I track quite a lot of things on a monthly basis. For me, it's productivity per capita. I also track my hourly income for me and the other fee earner in our company, to make sure it is a very quick fire test of seeing how much of your time you're spending doing non-profitable things.
Mm.
And that's something I'm working to really close the gap on. But yeah, I think profit, turnover, um, obviously your outgoings, you need to have a really good handle on your outgoings, and when they happen, whether they're quarterly, whether they're monthly. But I think those KPIs of profit per capita, hourly rate per capita, those things, depends on your business.
Yeah. Yeah, one of the things that often gets, people, especially, small businesses or entrepreneurs or whatever early on is, uh, that you can sell your services, right? And you can perform the services and all of that, but it doesn't mean the cash is in your bank account, right? You can have,
No.
as you said, vanity. You can have great top line. You can look at, oh, I'm doing great, but these people haven't paid you yet, or they're delayed
Yeah.
in pay. And I think that's something that often gets people, because especially if you're a small business or a solo person or whatever, and you do work for a larger organization, the reality is that you get pushed to the bottom of the pile there, because you don't have any clout. So they may, it may be 30 days they pay you, they may pay you in 60 days, and there's nothing you can do about it. And that is a typical thing that often happens
I
with
think that's a
small
good
business.
how many days is your pipeline
Mm.
on average from
Yeah.
completion to sell? I think that's a
Yeah.
very good thing. I've even had it closer to a year from one invoice being paid.
Yeah,
So
and you see, that's the thing is, and that's where you go back to, like, having proper finance emergency funds or whatever, because you could be in a situation where you have all this, top line revenue, but you have nothing in your bank account.
yes, you're feeling rich, but nothing in the pockets.
Exactly, exactly. Um, and at what stage do you think a business should look for a financial advisor? Do you think they should do it from the get go, or are there financial milestones that may be in your business that you say, okay, now I need somebody?
Yeah, I think it's easy to see when someone definitely should, and
Right.
that's when you can afford to be doing pension contributions, when
Hmm.
there's excess money and maybe life's a little bit easier. But maybe that life being a little bit easier would come a bit earlier if you sought advice during the tough days as well. We position our services so that people can just have a one-off check, really, to see, well, what do you need to be saving every year to make ends meet? And for the business owner, that's a good number to know, because that's the number you need to be paying yourself on top of all of your outgoings to achieve the life that you want. So many people are running businesses but not plugging in their personal goals into their sales targets or turnover profit targets. I also, during the session, a financial advisor will be also to work out for you, um, what's your end goal. So what do you need to be worth to be able to achieve the goals that you've got in mind? And so for a lady that I spoke to this morning, she needed an extra 93,000 in her financial plan to
Mhm.
achieve her goal. And she's like, oh my God, my business could be sold for way more than that. And that triggered in her mind, I suppose, the early retirement question, which had
Right.
she not known that, she might have been working for longer.
Yeah. So one of the things in your book of money lessons, right, and what you do and your writing, trying to be jargon free or whatever. Let's face it. I mean, the financial, all of that industry, very good at jargon, very good at
Yes.
there's lots of regulate all of this stuff. So what are some of the really egregious ones you see, like the jargon that is very simple once you explain it to people?
Um, well, just a financial plan sounds quite
Hmm.
complicated, but if you're just monitoring the ins and the outs, the assets and the liabilities, and you monitor them on a regular basis, let's say that's monthly, and you
Hmm.
want to do two, one for you personally, one for your business, then I think you're going to know so much more than most people, but also you're going to have so much more information and knowledge to take your business to the next level.
Mhm. So when you started this journey yourself, what were some of the what maybe were some of the things that surprised you at the beginning?
How much I was gonna cry. I'm joking.
So you would
Um,
say stock up on cleaning
yeah,
and stuff,
tissue.
yeah.
No, I think, like, I always thought that I was quite a resilient person, but, I essentially became self-employed in my early 20s,
Mhm,
and, it was a real shock to the system, and, I really learnt some hard lessons, which were the best day always comes after the very, very worst. So just
mhm,
keep going. I also learned the hard way about this boom and bust, like
mhm.
some months being very, very, very lean. Um, and I suppose in my 20s, I was very fortunate to not have many outgoings
Sure.
myself. So I could build the foundations of a business that actually suited the way that I wanted to live, really.
Mhm. Um, yeah, I that's a good point. I mean, that saying, "The darkest hours just before the dawn." So,
Yes.
yeah, yeah,
You
and
said
I
it much better than me.
No, but it's a good point because I think what you said about resilience, I think that's probably the thing that people need to understand. That if you're going to go into this, you need resilience, and you're going to have those days, right? You're going to have those moments where, and I guess at the end of the day, you need to come back on the why are you doing this. So, is
Yes.
that something that was important for you to establish the why and the purpose of why you were doing this?
It's something that morphs and changes over time,
Hmm.
really. I feel, um, yeah, of late, I'm actually questioning the why. So what's my bigger picture? What am I actually
Hmm.
trying to achieve? I think as the decades tick by, your priorities change and your business needs to move with that. Um, Yeah, so I think my definitely a good thing to check in with yourself every 6 months, I'd say, um,
Yeah, no,
to work
because
out
like
what
you were
you.
saying, like priorities change, circumstances change. So it is kind of an ongoing kind of review, isn't it? Right, really
Yeah.
an ongoing kind of appraisal of where you are, and then obviously when it comes to economic turmoil and stuff, what are some of the things when you're looking at the outlook, business outlook? What are some of the things you do to make sure that you're as secure as possible?
So, as a financial advice business, you need a good war chest for when markets are down and your
Hmm.
reoccurring income drops with the markets.
Right.
Um, Regulatory change is a big one for us, and so having money set aside to be able to adapt and change to any regulatory change is a very big one. But I think the exciting bit about business and the bit I love, I suppose, is trying to use those moments of change to try and get the best out of it. Really,
Yeah.
I think I
Yeah.
find it it's a good puzzle.
Absolutely. Well, listen, this has been great, Lisa. All of Lisa's information will be below this video. But before we go, please do remind people about what you do.
Oh yes, well, I'm a financial advisor, and you can find me on Instagram as Miss Lolly Money, and I do well a tip almost every day about money.
Excellent. I encourage you to go check it out. As we said, I mean, this is a jargon heavy industry, and it has it has benefited, shall we say, from being a jargon heavy sector, and the more people are educated and understand, like, that at the end of the day, it's not really as complicated as it seems. Listen, fantastic. Thank you, Lisa. Thank you
Thank
for
you.
watching and listening, and I will see you all again very soon. Thank you.